Well, Kim, why don't you tell us, first of all, how you came across the Angela Calla Mortgage Team?
Well, I've known Angela for many, many years, and I follow her on Facebook. I knew that when I was looking for something like a mortgage, that she was somebody who could probably help me.
And she did.
And she did.
Well, tell us about that experience, because you and your husband and family were able to save a fair amount of money by having your mortgage restructured with Angela.
Yeah, well, I was with another bank for, 10 years or so, with an extremely just overbearing interest rate of between 6.5% to 7.9%. So when we went and talked to Angela, at first we couldn't get any help. And I kind of have been talking on and off with Angela for a few years. And due to the economy, there was no way to get out of the situation we were in. And then when I went and saw her this time, because the economy obviously has gone up recently, she managed to save us, with combining paying off my husband's truck. I think it's exactly $1,300 a month. So it's pretty astronomical.
Well, that saving of $1,300 net every month obviously will come in handy. And Angela and I always like to know what people are going to do with that extra money, because we're two nosy rosies, really.
Well, we're hoping to go on a family vacation, because having 4 children, we are always looking at, where we could go, maybe Mexico, maybe Cuba. Everybody has that big dream, take their kids to a sunny place with white beach, sand. And it's about $8,000-9,000, and we just couldn't afford that with a huge mortgage. And now that we're paying a reasonable mortgage, we will be saving that in a year. So
yeah,
the vacation looks reasonable now.
And Kim, I know that there was a great level of stress that you and your husband had been under prior to visiting us, because your husband is self-employed, and being self-employed, we obviously show less income than what is generated. And I know that there was a significant difference in your experience working with us than other people that you had talked to in the past. Could you elaborate on that a little bit?
Well, yeah, we went to pretty much every bank. We went to every single broker. We even went to my husband's home bank, where his business accounts are and his personal accounts are and his investments for later in life are. And nobody could help us, because they were like, well, he's self-employed and his income's quite low and the economy's not great. But his income's not actually low. We just write lots of stuff off, because, who wants to be doubly gouged, right? We're paying a lot of money for interest on our home, and then we want to pay a lot of money for taxes as well. So, we just wrote off what we could within reason, and tried to make it lower somewhere else, right? So,
of course,
nobody would touch us, really with a 10-foot pole. And then when I went to Dominion Lending, I explained to them, my husband's self-employed. It looks on paper like he doesn't have a big income, but he actually does have a really decent income. And they were like, don't worry, we can figure that out. We can make it work, and we can help you, right? So
yeah, we have a mortgage for that, is what we like to say.
Yeah, actually, we say we have a mortgage for that. Exactly that.
Yeah, it's actually very simple. It was very simple for me to see your scenario with clarity, because obviously, as a mortgage professional, I'm self-employed. And so we're able to see quite easily exactly what we need and how to position it and which lenders are going to be best for you. And so working directly with our team, we were able to actually protect your credit score and position you best. And I think that's where the significant difference is. In your quest throughout the years, you hadn't met someone who had the expertise on how to position it properly. So it caused frustration and stress throughout the years. And we had been in touch over the years. And at first, when you contacted us, we couldn't help you. But we continued to work together on what it would take for us to help you. And we were both keeping an eye together, collaboratively on the market. And once we hit a certain value point, we took advantage of your equity in the home. And that's what allowed us to make the change for you.
Well, that's also what prevented it, was the equity in the home, right? When the economy had crashed,
yes.
It just looked like we had no money in our house. So, that was a big problem with anybody helping us. but also him being self-employed was another huge problem, right? So as soon as the economy got better, I knew calling you would be like, okay, now's the time to call Angela and make sure that, this gets sorted out, because it really was, it was almost $2,000 a month. Like, I don't know many people who want to pay that for a mortgage.
Well, you'd be surprised actually, because in today's day and age, a lot of people are paying that in rent. And that's why we tell people if they are paying that in rent, it's time to look at what you can get in a mortgage. Now, Kim, when we were talking and we were going over everything and you came into the office and you went over everything with the team, one of the big differences that we all saw and that you had brought to our attention that was really exciting for you was the fact of, yes, we're saving $1,300 a month, and that alone is life-changing. But what one of the significant differences are that is really going to build your financial future with you and your husband and give you a lot more options down the road is the difference in what your mortgage looks like now compared to what it was. And the big point...
yeah. I mean, the paying off principal, is almost 50-50. Where before it was paying off the principal was, I was paying $3,000 a year principal and $21,000 a year interest.
Exactly. And now how much of contribution are you making towards your principal?
I'm paying, I think over a period of 5 years, we'll be paying off over almost $40,000
instead of the $3,000 previously.
Instead of $3,000 a year. Yeah.
Yeah, it's
so
amazing.
Instead of basically, it would be, I think, $21,000 if I was with my old mortgage over 5 years, where now it's going to be almost 40. So it's almost double paying off what we were paying off before.
Exactly. So, we always, on the mortgage show, Kim, we always talk about how much we save you on a monthly basis. But, I think that because we take it for granted that that's so much money and it's so evident what the benefits are, I think that we forget to include that that's an additional benefit that people are realizing as they move on. And over time, that will allow you a lot more financial freedom and a lot more choices, just as saving the $1,300 a month is moving forward.
Oh, yeah. The $1,300 a month is huge. But at the same time, in the end, the equity, that's just as big. That is definitely just as big.
Exactly. So for people who are tuning into the show that maybe haven't dealt with us before, they're thinking about getting a mortgage, what advice would you have for people that are considering a mortgage?
Call the Angela Calla Team, because if you're in a jam and you're stuck and you don't know how you're going to get out of a bad mortgage or a bad interest rate or a bad plan, they've got some kind of mortgage or some kind of structured system for you that will definitely help your situation.